This morning on Today's Money, tax changes we all need to know about. Whether you're an early filer or you usually wait until the last minute, there's some new deadlines this year that can affect everybody, and they're just some of the changes in store. Nicole Lapin hosts CNBC's Worldwide Exchange. Nicole, good to see you.
Great morning to you.
Good morning. So this is interesting. The IRS expecting 140 million individual tax returns this year, but the good news is the date's been pushed back.
Usually it's April 15th, right? That's the dreaded day. Now it's going to be April 18th.
How come?
It's a few days, we'll take it. Saturday is a holiday in Washington, D.C., so they push that up to Friday. Make a long story short, you get until Monday, which is April 18th. And if you file an automatic 6-month extension, you get a little bump there as well. It's October 17th. But remember, that's an extension to file and not to pay.
Yes.
Remember that. And of course, if you itemize your taxes, that is going to change a little bit as well. Even if you want to get a jump start on this, you can't. You can't file until a week from today.
How come?
Valentine's Day. The IRS is not ready for you. So Valentine's Day is also the day to send your love to Uncle Sam.
So who else is affected by this?
The IRS says 1 in 3 taxpayers itemizes their deduction. So you have everybody who pays a mortgage. So if you pay a mortgage interest rate and you want to deduct that, medical or dental expenses, charitable deductions, state or local taxes, that's one bucket, Al. And then you have the bucket of people who claim these so-called above-the-line deductions, and those are expenses that you basically don't have to itemize in order to claim. And those are teachers who are deducting $250 for classroom expenses that they pay out of pocket, or students who are putting on their tuition fees or other expenses for education.
What about small business owners or people who've got pending home loans?
Yeah, so starting now, loan officers are no longer accepting 2009 returns as proof of income, so you're going to have to wait until your 2010 returns are fully processed, and that's going to affect small businesses looking for loans. That will also affect people looking for home loans as well, because remember that home buyer tax credit that went into effect in 2008, part of the stimulus, $8,000 for first-time home buyers, $6,500 for repeat buyers, that expires. So if you took that deduction, you're going to now have to pay up.
So that's going to impact your tax return.
Absolutely.
Now, what about self-employed folks with health insurance premiums?
15 million Americans are self-employed, so this affects a good chunk of people. They can now deduct their health insurance premiums from their tax returns, or they can use that against Social Security taxes. Moving forward, 2011, you can do that, but you can also deduct one for your child under the age of 27, and that's going to be a big help, especially for recent college grads who don't have a job and they're paying for their own health insurance. Folks
who deduct or use mileage rates, mileage as a deduction, there's a change there too.
Check out your odometer. You could find some coin in there. It is 50 cents per mile for business expenses, 16.5 cents for medical or moving expenses. That 0.5 cents does add up. I promise they're not going to send you half a penny. Charitable deductions, you also get 14 cents per mile.
Folks who got college-age children, what's going on there?
Yeah, the IRS is extending these deductions for 2011 and for 2010. If you earn up to $80,000 if you're single, $160,000 as a couple, you can deduct $4,000. But that's not dollar for dollar. I would recommend the American Opportunity Credit, which is up to $2,500, and that's dollar for dollar.
There's not some great news for folks in this country who are unemployed.
Unemployment, you used to be able to deduct $2,400 as part of income, and now unemployment is taxable. And this is obviously going to affect 9+% unemployment rate. Some say it's closer to 17%.
That's horrible. And property taxes.
Yeah, you used to be able to add as much as $1,000 off your property taxes as a standard deduction. Now, if you want to deduct your property taxes, you're going to have to itemize. And remember, then you're in that bucket of the itemizers who we talked about before.
All right, Nicole Lapin, always good to see you. I see every morning on Wake Up with Al on the Weather Channel. Our business update. Thanks so much. And as a reminder, you can watch Nicole on Worldwide Exchange weekdays starting at 4 a.m. Eastern on CNBC.